This is the dollar yen. It's an hourly chart, and it is from late last month, just last week. As you can see, I have labeled the waves on the chart to save some time. You will learn how to count waves when you read about Elliott wave. I really hope that we will have some time to talk about it tomorrow. I'm not sure, to tell the truth. Our week is coming to an end, so I don't know what will be the subjects that we can squeeze and what's left of our time for this week. I hope that we can talk about Elliott waves or anything interesting to help you spot more and more profitable opportunities. Okay, so let us see what this dollar yen chart has to teach us. Okay, 1, 2, 3, 4, and inside the 4 even we have the ABC. If you are familiar with the Elliott wave theory or the wave principle, as it's officially called, you would understand what I said. We had a previous drop and we started rising from it. So this is the first wave. The second wave retraces a large part of the first wave. This is the personality of wave 2. Wave 3 is usually the strongest one. It's not a rule, but it is usually the case. Most of the time, wave 3 is the strongest. So whenever you see a setup like this, this is probably wave 3, okay? Because it is the strongest one on the chart. So even if I come to this chart without counting, I would not start with 1. That may surprise you. I will start with 3. This is very strong wave. Okay, I'll write 3 above here, and then fall 3. Then this should be 1, and this this should be 2, and this must be wave 1. And then I look for wave 4. Wave 4 correction. It's the difference between wave 2 and wave 1 is that wave 2 usually retraces a large amount of wave 1, but wave 4 usually retraces a smaller amount of wave 3. Look at this, wave 1 and wave 2. Wave 2 is obviously can be related in size to wave 1, but what kind of comparison can we make between wave 4 and wave 3? I think wave 3 is obviously much, much larger than wave 4. And inside wave 4, of course, you know this, one of the most common corrective patterns is the ABC. A, B, C. And you can expect that inside waves 4 and 2 most of the time. Even here, it's not as clear. A, B, C, it's not as clear, but it is still an ABC. Here, it is much clearer. And with the experience in wave count, your eye will get the training it needs to spot such obvious corrective patterns easily. A, B, C. This means that wave 4 has ended here because it's a 3-segment move. And from here, we expect the price to push past the top of wave 3. Here's the top of wave 3. We pushed past it, and this, if I buy here, I place my limit just above the wave 3, or maybe I want to take my chances. That's okay if the price moves higher, as long as I move the stop to the profit zone. Okay, so after the 5, if you are familiar with Elliott, comes the correction A, B, C. I think it is extremely obvious here. A, B, C, and C is usually the strongest among the 3. You can see this sharp move, indication of C, just like 3 is the strongest among the first 5 waves, the numbers. C is the strongest among the latter waves, which are the corrective waves. Of course, these are impulsive waves, these are corrective waves. So, what do we have here? Of course, first of all, we have the 38% level. No one would blame you if you made the decision to buy here, but by looking at the RSI that it's not still inside the oversold area, maybe you would prefer to wait. Okay, so yes, of course you can buy here, but the RSI does not support that decision so much. Wait for the RSI to go into the oversold. Okay, and here the price comes extremely close, maybe 2 pips above the 50% level. This is close enough. Sometimes you have to settle for a difference of 2, 3, 4, 5 pips. Personally, I consider anything up to 10 pips as extremely accurate. Sometimes within the 10 pips above the level or the 10 pips below the level, we see the bottom that we are looking for, and we see the opportunity to get in the market. Okay, so here we did not have the support of the RSI, but here we had the support of the RSI. Okay. What else do we have? We have a green candle. This is what we call a hammer. We have not talked about candles, unfortunately, but I really hope in the future we will be talking about these beautiful patterns of the East. This is a hammer. It came after a drop. The lower shadow is much longer than the upper shadow, and the body, the real body of the candle, is small. These are the things that we need in order to classify this pattern as a candle, as a hammer. And with the close of this hammer and the RSI starting to rise away from the oversold area, and the bottom of the hammer being like maybe 2 pips away from the 50% level, and finally the wave count, the 5 up and ABC 3 down, with all these factors, if you do not reach the conclusion that buying here is an excellent decision, I think you need to work on your technical analysis skills. Remember that technical analysis is not only science. Of course, we have the tools, but it's not an exact science, of course. A hammer does not mean that the market must go up. It means that the market goes up most of the time after the hammer. There are times when the market do not go up even after a hammer. So it's not an exact science, but it is, and this is very important, it is an art. With time, you will come to realize that you are doing some kind of art, because you are making the decision after receiving all these signals. The candle is saying something, Fibonacci is saying something, Elliott is saying something, RSI is saying something, moving averages are saying something. So you have all these inputs into your decision-making process, and it's an art to pick what to do in the shadow of all these signals that are coming from everywhere. This is the kind of art that you should be prepared to do when you are trading financial markets. So just before we leave this chart, I think this is one of the best setups that I have ever seen recently for a combination of the Elliott and Fibonacci together. And of course, it's supported by the RSI and the candles. So when you combine Fibonacci and Elliott together, you can expect these kind of moves. Of course, this is an hourly chart, so the target was not very large. We need, after of course an ABC, the price should be expected to go past the previous top of wave 5. Wave 5 topped at around 108.80. We got to 108.90, and later on the price fluctuated and we got above 109 for a short while before dropping. I think we got to 109.20, something like that, before dropping again. So if you bought here and you placed your limit above the top of wave 5, just above it, you would have cashed like 45, 55 pips, something of that kind. And this would be, this answer is to Jack and Rinko, this would be yet another trade on your way to the 1,000 pip a month. Okay, another example. This example shows us the help that we can get from testing a Fibonacci or retracement level twice. This is a wave, this is a corrective ABC. I hope that you guys are starting to have that eye that I wish you have when it comes to Elliott. In the previous chart, previous example, and in this example, to me, as somebody who's been using Elliott wave analysis for like 17 years, maybe in the second year of my career or third year, something like that, I was introduced to this principle, and I've been using it since then. I think that my eye is trained to spot the patterns and the waves, especially one of the most rewarding patterns, and that is the ABC. In the previous chart, we had, let me go back to that chart. We had more than one ABC, A, B, C, then the price moves, A, B, C, then the price moves in the other direction. And on this example, we also have the price drop to here, we got up to here, A, and then here, B, and then C. This is also an ABC, comes after a strong wave, a falling move, and then an ABC, and then another move in the direction of the previous move. So we have a drop, ABC, then a drop. You should expect this to happen most of the time. Whenever you see a strong move, then a move that can be divided into 3 segments, expect another strong move, or at least another move in the direction of the first move, the previous move. So I'm giving you secrets, guys, that worth a lot of money, and because of FX Educast you are getting this for free. So thank you to FX Educast, and please guys, try to write down as much as you can out of this. The ABC thing is very good, and I really recommend you spend some time training your eye to spot the ABCs on the chart, and just on your own go to the chart and see if you can find ABCs and see what kind of moves do we have after the ABCs. So here, let's go back to this example. After the ABC, we had another drop similar to the previous one, and that was to be expected, of course. From there, we started recovering. We reached the 38 level. The bottom is around 128. This is, of course, the pound yen, one of the most exciting pairs there is in the forex world. And of course, it's risky. It's very risky, but it is extremely exciting. When it moves in your direction, you are going to make a lot of money. The price drops from around 133 to around 128. This is a 500 pip move. 500 pip move. This is a huge move. And then it starts rising again from around 108 to around 130, 200 pips. 200 pips divided by around 500 pips is almost 38%. We try here. We fail because, you see this long shadow to the upside. This means we failed here, and we attempted to rise again. And this time we also touched the 38% level, but this time we did not fail. Why? Because after testing, we have ourselves our red candle, a sign of weakness, and the price started falling again. Okay, this is the chart of today, guys. We still did not reach the limit or the target desired from this setup. The target should be, and I intentionally wanted to include this example so you can follow it and see for yourself. Some people do not believe that you can make 1,000 pips a month trading forex. Well, I want you to see what will happen to this case. Okay, if we were following this a couple of days ago, a sell at the 38% level on the second failure, not on the first failure. First attempt, nobody can blame you for not shorting here. But on the second attempt, I think you have wasted the chance if you did not sell here. So if you did and the price dropped, you still did not reach the desired and the desired target, because it should be below the previous bottom. The previous bottom is around 128. So our target should be, from shorting at around 130, should be below 128. 200 pips on this trade is what we should expect. Okay, at least 200 pips and probably more than that. So have we done this yet? No, sorry, let me. Yeah, so have we seen 200 pips yet? Not yet. What does that mean? That means that this trade is now open and it is seeking 200 pips of profit. So please keep this on your mind. Let's check. Maybe we will check this together tomorrow. If you guys remind me, we will check this and see if the price is closer to our target of trading below 128. Okay.